Morning, everyone. I'm Polly. Hi, Patty.
Hey, Polly, how's it going?
Good. How are you?
Pretty good, pretty good.
Summer has finally hit Sydney, which is really nice.
Why would anybody watch the news when they can just get the weather report from us?
Weather is great today.
Fantastic. How's the week been?
Yeah, pretty good.
Yep.
It's the hump day, which is always good.
Yesterday was hump day for me. I've got a short week.
Oh, yeah.
I'm
Where
not
you
in
going?
Friday. Going to Western Australia. I've never
To
been
drink
before.
some wine.
I'm sure there'll be a little bit of wine, but
Mm.
yeah, just gonna shoot across the country.
Nice
It's
one.
crazy. It's like 5 hours from Sydney. It's easier to go to New Zealand. I've never been to Western Australia
All
before,
right.
so I'm a little bit worried about the jet lag, to be honest. Next week, I'm going to be doing a webinar off not much sleep and a bit of jet lag. So,
So
we can check
I'm
in
gonna
there
be
and see how
doing
we're
most
feeling.
of the talking. What's
I think
next?
so.
Yeah. Anyway.
We'll figure that out later. But,
Awesome.
thanks for tuning in, everyone.
Hi, everyone.
We're talking about cost and profit today.
Yeah, so today we're going to look at cost and profitability reporting in Streamtime. Ideally, Streamtime is the only source of truth when it comes to looking at those total costs for your business. So you can then ensure consistent reporting when it comes to business profitability, and then make those better business decisions around your pricing or your clients, perhaps, if they're profitable or not.
Exactly, yes. Today we're going to be we're going to be giving you the tools in terms of what you need in Streamtime, what you need to understand, what you need to double check to make sure that you're able to ask questions and answer questions like who are our most valuable clients, who are our most expensive clients, is that client worth our time, and do we need to increase our rates? Also being able to look at these kinds of ideas, these thoughts across all sorts of things: team members, clients, different types of jobs, different areas of work in the business. Look at that over time, and then understanding if you decide that you do want to increase your rates to get closer to a target margin that you might have set up. What the best way to kind of go about doing that is. We'll show you where that all starts today. It's all about finding a balance between cost and sell rates.
Yeah, for sure. So we'll start with digging deeper into costs that can be associated with your business. So costs on time and expenses and the importance of setting them up properly. Then we will look at how you could be gauging the estimated profitability of the job after planning a job, while planning a job, I guess, and focus on the JCR, the job cost report, and how it reads. And then we will touch base on some profitability reporting and how you can create them in Streamtime based on different aspects.
Brilliant.
Shall we begin?
Yeah, housekeeping.
I know, housekeeping.
You nearly missed the housekeeping.
That's just my favorite part. All right, so housekeeping, please say hi, introduce yourself, say where you come from, what you do, your role. Always nice to hear from you. If you've got any questions, just shoot them through as well. We will cover them at the end of the session. Any comments, any ideas, just feel free to just send them through. We love them.
Yeah,
We do.
absolutely. Let them rip. Yeah, we'll come back at the end, touch
Yeah.
base on those. But yeah, let us know who you are. There's a few of you in here, so don't be shy.
We know you're there.
Yeah, hectic big brothers watching. Cool. So getting underway, we're talking about cost and profitability in Streamtime, and so one thing that we'll touch base on again, and if you've been to a webinar and you've seen this, then that's cool. It's always good to kind of understand it. But talking about cost rates, Polly, do you want to start just talking about why they're important, how we think about them in Streamtime as I just get this up?
Yeah, for sure. So before we even talk about cost rates, there are two types of costs associated in your business. So there are team cost rates, the individual cost rates, or costs against an expense that you're using for a job. So let's talk about cost rates. So cost rates are associated with an individual team member. So we've got, if you look into a team member's profile, you've got billable rates and the cost rates. So how do they get calculated? So they're great question. I just asked myself a question. So it's individual salary plus the overhead, so the expenses that you pay within the business, your rent, the office space, office suppliers, I don't know, Hello subscription and Netflix, all that stuff that you need in your business, and also all that stuff you need to have your business operating. And we also like to include a little bit of profit into your cost rates of an individual,
Yeah.
just to be safe in case something goes wrong within the job.
Yeah,
know,
and
just-
I just add that the overhead figure, you're going to be calculating that for the year. So how much does it cost to run our business for the year? And like you said, Polly, that's accounting for everything. And the more conservative you are with these figures, the better.
The better. Yeah.
Figure that out for the year, and then you're just churning that out, dividing it down into an hourly rate, and splitting it evenly across each team member.
Yeah, and it's important to review them, from time to time and get them updated if things change, because things change all the time and people get pay rises.
Totally.
Yeah.
Christmas bonus.
Christmas bonuses, and so update them. It's important because it's going to affect your reports in the future.
Every few months, if like it would be like ideal if you are if those kinds of levers are changing that frequently. Otherwise, at least once a year should be bare
for a
minimum,
small business.
definitely.
Yeah.
So come in here, review these. Lots of people that I've spoken with at least tend to have this already kind of mapped out in some kind of spreadsheet. They kind of figure out what that cost rate is, particularly for their business. And so it's quite easy once they've got some spreadsheet set up. Once it's just a matter of changing the salary for that person, which then kind of, or whatever costs come into the business then, and change whatever the overheads might be to kind of just work this hourly cost rate figure out. But the reason cost rates are really important, especially when we're talking about time, is that because they directly inform the sell rates, or they directly influence the profitability. And there are a few times where I've spoken to people who kind of start planning a job or trying to quote work and trying to wondering why their profit margin or their yield isn't as great as it could be. And it's often because they're thinking more about how much they're trying to bring into the business rather than thinking about how much it's costing them and they want to take home. And cost rates are definitely the best place to start when you're thinking about this, idea of profit. Obviously, it's thinking about, even if you are like a sole trader, how much do you want to take home for yourself at the end of the day? And like we said, be more conservative with that figure, because it will only work to increase your margins. It'll increase your rates, but it'll also increase your margins, and it'll mean that you're able to get a truer idea of where things might actually be heading.
Exactly. Well said, Patty. And when you think of how profitable your job is when you're planning a job, it's pretty simple and easy to understand. So in order to get an idea of total profitability of the job, you need to understand how much it's going to cost you as a business.
Exactly.
So we make it very easy when we are planning a job in Streamtime. Adding those items and expenses perhaps into a job, you can then gauge that estimated costs that you associated within that job, so to then understand whether this job is going to be profitable or not.
Definitely, and we'll get to that in a second. I just wanted to touch on expenses, because you mentioned it before, Polly. But the other costs the other area where costs occur in Streamtime is on quantity-based expenses. Items are time. Your team member is time. That's probably one of the greater costs in your business if you're running a creative agency or studio. But expenses as well will account for the costs that we purchase something for, and then if you are selling it onto a client, there could be a margin in there too. And we can set these up here. For example, Kate's a freelance designer that we use. These are the hours that we pay Kate, but we sell her work for a little bit more, because that's just the service we provide to our client. Great, but yes, so let's
plan a job.
We're going to set up a new job. We're starting from scratch here to get you around this idea of estimated profit margin at the start of a job, something that lives in the JCR. When we're talking about true profit margin, we won't be able to show you that until there's revenue being accounted for on that job, and so until there's an invoice that's been created and sent out.
But we can still estimate it, looking at the cost rates of individual based on how you plan your job and expenses that you add. So
we're doing a rebrand for Harris Farms here.
Yeah, we love Harris Farm here.
So good.
Let's add a couple of items.
Yeah, perfect. So let's just say research.
Yep.
Let's say 50 hours. Let's say maybe $180 an hour is the sell rate here.
And a team member.
So let's how about you and I work on this one together, Polly?
Yeah, I think.
Cool.
Yeah.
So even if at this point, what's really important is that I'm adding team members here, these guys might definitely be working on it. They might maybe be working on it. It's without having team members on these items, we won't be able to give you any idea of an estimated profit because
Exactly.
there's no understanding of the cost here. Now, because we've added myself and Polly, we're able to average out the cost rate of these team members at the moment for those 50 hours of work and comparing the cost of that versus the $180 sell rate. What I might actually do in this instance to get a little bit closer to what might be the truth is that I might use their hourly rates and I might plan the time for them. So let's say they're both doing 25 hours here, 25 and 25. In this instance, perhaps I know that these guys are definitely working on it. So I can be this confident. In other areas, if it's unclear who is going to be working on it, then I would suggest creating that item, which we might do in this next instance. So let's say concept development is going to be the next work we're doing. Let's say there's going to be about 45 hours of this. And let's say we might bring Danielle into our concepts as well, and maybe Michael too.
So what we do, we take the average cost rates of those team members and calculate that estimated cost for the job, right?
Yeah, exactly. And so the cost, the estimated profit here, or the estimated cost, is going to be a bit more ambiguous. But we would rather have some ballpark figure of an estimated cost and profit using these people because we know they're most likely to work on it. Exactly. So that average will actually work in our favor here rather than having nothing at all.
Yeah, otherwise we don't take into consideration anything.
Exactly. So I'm just going to call this the discover phase.
Awesome.
And
should we add an expense as well?
Let's add an expense. Cool. So let's see. Expense. Maybe
Kate?
Kate, yeah, freelance is going to work on this.
Perfect.
Maybe we're getting Kate in for 2 weeks of work. So 10 working days, and I can see this all at work here. This is all good. I'll save that down. And
perhaps we want to add a budget as well.
For sure, we'll definitely want to add a budget. Now, at this point in time, I can say that our budget might just be the total of these two things, but it might be about, let's say, $25,000 for this first phase is what we're roughly hoping to scope. Our planned time is slightly underneath that, which is just kind of helping us cover ourselves a bit at this point in time. But getting this to an area of 25 is looking good. Maybe that's what we agreed on with our client.
Awesome. So you can generate a job cost report at any time. And what we're doing right now, we're actually generating it before we even starting to work on this job, even quoting for this job. So Patty just downloaded a job cost report for this rebrand job for Harris Farm that we've just created. And at a glance, you could see how it was planned. So the budget that we've added and total estimated costs. So as Patty said at the beginning, it's important to add those items and add team members under those items. Otherwise, we don't take their cost rates into the consideration. And if you've got multiple team members, we take their average cost rates. So total estimated cost is basically our cost associated with the team members and expense that we've added as well. So all of those, this job is actually broken down, if you scroll down, broken down in different areas, items and expenses, so you could see how they relate to that profit margin, an estimated profit margin too.
This is really useful to be able to see this at play. This just breaks down really clearly how that figure above is calculated.
For sure.
In this first research item, you can see that because we had planned out the hours by team member, so Patty and Polly, we've each assigned 25 hours. Across this line, we can see that sell rate, the total, which is multiplied by the 25 hours, the cost rate, what that estimated cost is, which is the cost rate multiplied by those 25 hours. And then the estimated profit margin, which is brought through as a percentage, and then a dollar figure at the end there too. And then we're finding the average of that for both team members for the total of the item, giving us this number here, which is super generous.
So, Patty, I have a question for you. What is the estimated profit margin for the job? How do we calculate that?
The estimated profit margin is the total estimated costs. So everything on here, and so it's this item, and it's this item, and this expense. It's the average profit margin of all of those things together divided by the budget. So that $25,000 is what we expect this job to expect what we sorry, it's what we expect our client to be paying for this job. Ultimately, when the quote is approved, that budget figure will then get we'll update that with based on what the client has agreed to.
Yeah, awesome.
So that's what we're working towards, and that's because that's the expectation of what we'll plan to invoice at the end of the day. Now, this is another important point: is that if the scope changes throughout the project, it's important to keep that budget figure updated. Then you can run another job cost report and see where your estimated profit margin is at that point in time.
And I just wanted to add as well, anyone with access to cost rates in general in your business can download the JCR. Whoever doesn't see those cost rates, they won't be able to download JCR, which is fair enough. We're talking about cost rates for individuals.
Sensitive information.
Cool. So once you start tracking time under a job and start working on this job, your JCR your numbers will change. So obviously you can download those JCRs at any stage of the project to see how your job's going.
I actually encourage people to download one at the start of the project, like before the quote's even been approved. One maybe like 6 weeks in, and obviously depending on the the length and the type of your jobs, like you'll find different points in time more beneficial, but maybe like a 30% mark, a 50% mark, and then just like maybe it's good to set milestones of time periods to download those JCRs, and then you can have multiple versions of them in a folder somewhere where you're kind of keeping all that information about the client and the job and how it's progressing, just so you can stay on top of it.
For sure. And obviously when something changes, the scope changes, it's better to download it straight away.
And this is we'll just get up a JCR here of a job that has had a bit more time tracked against it. There we go.
So we are already working on this project.
Yep.
Cool.
We've been working on this project for a little while.
Awesome.
And it's a pretty healthy profit margin.
Yeah.
Oh, it's actually 23%. That's okay.
Okay.
It's okay.
Yeah.
But we can see how this compares to the estimated profit margin at the start of the job as well.
Yeah, so looking at those profit margin comparison, the actual profit margin and profit margin versus budget, and the estimated one that we've estimated at the beginning of the job. Yeah.
Exactly. And again, as you progress throughout the job, the project, we'll see what that profit margin looks like at the item level too. So again, where we've planned hours per team member, we'll see how that's coming through here. We'll show you these figures and update them. And even if there were team members, like in this instance where time has been tracked by team members who weren't planned on there, we're going to see that get pulled through and look at the profit at that time too, although there was no estimated profit there. So it's good to know that you can kind of come in here at any point throughout the project and deep dive, I suppose, into how that project's really tracking.
Yeah, for sure.
Cool. Brilliant.
So, should we take a look at creating some profit reports?
Yeah, let's do it. So
I hope by now it makes it easier for you to understand how to gauge that estimated profitability of the job. But then obviously we make it easy in Streamtime to report on your actual profitability and the client profitability as well. So what are we doing now, Paddy? Where are we?
I often suggest that setting up a standard profit in progress favorite is a really easy and good way to kind of start looking at profit. If you kind of want to then chop up your jobs and start looking them in different ways, this is a great foundational place to start. So profit in progress, I'm looking at the columns that I've got turned on here. I've got my company name, my job name, my expenses profit, my time, total profit, the profit margin, what's been invoiced. We're interested in this because that's what informs our actual profit. And then labels as well. Labels are always a good one to kind of have on. So I can scan across here and really clearly see that profit. If you are interested, you might also want to look at the costs here too. But looking at the filters that I've got set up here, so company is not Streamtime, so obviously there's no internal jobs here. The job status is just those that are active. That's all I'm interested here, but maybe you want to include for archive too. That's up to you. Job labels are not internal and are not opportunities. So if there is any work that I'm doing which is prospective, then we're just making sure that that's not being filtered in here.
Yeah, but it's good to kind of to set up this generic profit report first, and then use those filters to change it, to filter this data a bit more based on labels that you want to see or based on the client that you want to report on. So yeah, we recommend just saving that profit in progress report with all those columns there, and then use filters to change it anytime you need to.
Totally. And maybe you do have a big account with someone like Nike. You can always do this and then add your Nike profit if that's a report that you're going to be looking at often.
Sure.
And then scanning through here, just looking at how generally all of our jobs with Nike are actually tracking. Similarly, there's all sorts of ways you can cut this. As you said before, Polly, you can use labels. And in our business, we have labels to indicate account managers or project leads. And I want to look at Paulina's projects here and how Paulina's projects are tracking, and we can see here how profitable they are. Yeah. And I can see here that they're looking pretty good. Nice one.
You're welcome, guys.
Cool.
So yeah, you can generate this report at any stage, once a week, once a month, as long as you've got that profit and progress report set up, ready to go. Let's take a look at the time cost report, grouping by a client perhaps. So this way you can analyze how profitable your clients are. So what Paddy's done, he's gone into jobs, gone into time, and grouped this by a company, so your client. And then you can use filters to set up the date log. So we are looking at everything that's been tracked since 31st of December last year. So since this year, since January the 1st.
And that's just up until today. So.
Yeah. So you could see the hours that have been tracked by, grouped by a client, and cost and sale rates of individual. So you can understand this. How much profit are you making here, and how much is it costing you as a business?
Totally. This is high level cost and sales. So looking at where most costs are going and which clients might be most profitable. Once you kind of get this going, you can look at it by client.
Maybe you want to filter it by the most profitable client?
Yeah.
By sub, if you...
Oh, like this?
Yeah.
Okay. Yeah.
So looking at the most
sorting it by cell. Yeah, no, good call. And that's us. So we do lots of work for ourselves. Let's remove Streamtime from this list, and then we should see them disappear. Cool. So Nike are one of our biggest clients.
I'm not surprised.
That's a nice margin by the look of things there. So we're pretty happy with that. But then, being able to look at this by item name as well. So which area of work in our business is where we make most of our profit, but also which ones are most expensive. So where do we spend most of our time? Which ones are most costly? Are there any ways we can kind of leverage that better?
Yeah.
Or should we be charging more? So these are all questions that we can be asking, and dividing that sell into that cost is essentially going to give you, the markup, the margin on how that works tracking. So it can allow you to, ask questions like, do we need to increase our rates? Should we be increasing our rates?
And lastly, let's look at the expenses report as well. So perhaps you want to report on all the expenses that you used within the business and how much profit you actually made, looking at the markup. So
So our markup is here, and again, filtering this by all sorts of things. So maybe it's a type of expense, maybe perhaps. Not a type of expense, but we could use an expense name, or like maybe expense contains travel, something like this. Or that might be the label. The expense label contains travel.
Yes. So same with the generic profit report. You can set up your generic expense report with the cost and sell rate and the profit, looking at the markup, and then using filters to then filter this data by different types of expenses, perhaps, or when this expense has been recorded, perhaps in the last 3 months or 6 months or a year.
Exactly.
Awesome.
Cool. Brilliant.
All right.
So thanks everybody for tuning in.
No questions as well.
Questions.
I think it's a good thing.
Yeah, I hope so.
Yeah, we hope so.
Yeah, sorry about the dropout. That kind of, I don't know what happened there. I think that was a technical difficulty with our service. But thanks for tuning in. Hope there are a few nuggets of wisdom in there,
Yeah.
or just handy tips for you to take on things that you haven't quite thought about before, new ways to think about reporting or looking at the cost of your project, and
Overall
um,
business profitability as well.
definitely, absolutely.
I enjoy your time in Perth, buddy.
Thanks, Polly.
Mm.
I'll see you on the webinar next Wednesday. Um, uh, yeah, with a
Yeah.
few bags under my eyes, most likely. All right. Thanks, gang. Bye.
Bye.